You're listening to AI Prism from Seoul Economic Daily.
It's Monday, May 11. I'd like to share some thoughts about global investors. And right now we're seeing a week of, well, some really highly concentrated bets for global allocators, specifically those with Korea exposure.
Yeah, it's heavily driven by, very narrow capital flows and these really tight geopolitical corridors.
Right. It's fascinating because if we look at the live capital flows, you can practically see how foreign institutions are applying these bets. Like, it's a very surgical maneuver.
It really is. I mean, the numbers tell a pretty stark story.
They do. We saw about $1.0145 billion, so roughly 1.49 trillion won, just get pulled straight out of the broad iShares MSCI Korea ETF, ticker EWY.
Right.
But then, in that exact same window, there was this massive influx, like $1.9538 billion, which is about 2.86 trillion won rushing right into a dirham ETF.
Yeah, so what you're watching there is the Samsung trade happening in real time.
Samsung, that's the local term for combining Samsung Electronics and SK Hynix, right?
Exactly. It's a shorthand for taking those two giants and treating them as one focused position. I mean, together they make up nearly 48% of that entire DRAM ETF.
Wow. But wait, the Coast PI just crossed the 7,000 mark recently, right? The Chill Champion milestone.
Yeah.
So are foreign allocators basically just using these thematic ETFs as a scalpel? Like just slicing out the pure AI memory exposure and abandoning the rest of the market?
Yeah, essentially. I mean, it's a structural long DRAM bet. By stripping out the broader economy, they're putting a strong floor under Samsung and SK Hynix. But it raises a massive tail risk for the rest of the index if that global AI enthusiasm cools even a little bit.
There's no foreign capital buffer for the rest of the market to fall back on.
Right. Exactly.
And the success of that narrow tech bet, it hinges completely on the U.S.-China trade architecture.
Which brings us to the Trump-Xi summit in Beijing on May 14.
Yes, incredibly high stakes there.
Because they're talking about AI controls, but also, and this is huge, there's talk about letting the Chinese EV maker, BYD, into the U.S. market. Yeah, and if you are holding Korean auto stocks right now, that is a flashing red light. I mean, think about Hyundai. They've poured billions into U.S. manufacturing facilities.
Right, assuming Chinese competitors would be kept out.
Exactly. Their entire financial model for those plants assumed insurmountable trade barriers. If Trump relaxes those and lets BYD in, it just fundamentally crushes the return profiles for Korean automakers.
But wait, Trump has always been super protective of U.S. auto interests. Why would he easily trade away those protections?
Well, because he desperately needs a win before the midterms.
Oh, right.
Yeah, structural analysis shows he's walking into this summit with an unusually weak negotiating hand. Xi has significant leverage here. So the risk is that Trump trades away those long-term EV barriers for, an immediate optical victory, like getting China to buy massive amounts of U.S. soybeans.
That makes a lot of sense, especially since his weakened position partly stems from, well, our next macro risk. Yeah. Stalled Iran-U.S. ceasefire.
Yeah, that situation is really dragging out.
It is. Iran is just ignoring U.S. deadlines entirely, while Russia and Qatar are actively competing to mediate.
And this directly ties back to you as a Korea investor because it's a huge risk for the Strait of Hormuz. I mean, South Korea imports virtually all of its crude oil.
So a sustained disruption there.
It structurally lowers the won, and it immediately squeezes operating margins for refiner and also major shipbuilders like HD Korea Shipbuilding.
Which perfectly explains why NATO is suddenly trying to pull its Indo-Pacific allies into shared defense infrastructure.
Right, the Starlift program.
Exactly. NATO just invited the IP4, so that's South Korea, Japan, Australia, and New Zealand, to its Starlift satellite resilience program.
If the government actually engages with this, it's a massive structural expansion for a company like Korea Aerospace Industries. They get to access a multinational market instead of just relying on the domestic defense ministry.
Oh, that's a huge catalyst.
Okay.
Let's do some quick hits before we wrap up. First, the Seoul Gamey, the Korean retail investors, just piled into Intel after its Foundry pivot.
Yeah, they really did.
The Korea Securities Depository showed they threw $475.68 million at it. That's about 697 billion won.
Which is a pretty aggressive shift from defensive posturing to offensive bottom fishing.
Definitely. And second, the UK digital bank OakNorth just posted a $235 million, so 330 billion won profit. And it was driven entirely by their AI credit analysis platform. But why does a UK bank matter for Seoul?
Because it's being weaponized against Korea's harsh finance system. Korean banks have historically relied on really rigid collateral-based lending.
Right.
But OakNorth's efficiency is signaling regulatory pressure for Korean banks to adopt AI credit scoring. If they do, it could help resolve the Korea discount, that persistent structural undervaluation of Korean assets.
That would be a game changer.
It really would. And if I can leave you with one final thought as you navigate all this, just ignore the diplomatic statements out of Beijing this week. If you want the true geopolitical signal, watch the physical tanker traffic data in the Strait of Hormuz over the next 10 days. That's what will reveal the reality behind all these concentrated bets.
That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.